Hello. Hello. Yes, Meghna, can you hear me? Hello.
I can hear, sir. Rajesh.
Yeah, Rajesh. Meghna, can you hear me? I'm not able to hear your voice. Hello. Yes, I'm asking some question, Meghna. Can you hear me? Hello. Okay, Rajeshwari, you answer this. What is happening
Yes,
here?
sir.
What is happening here, Rajeshwari? So,
Sir,
hello.
sir, we are calculating this current asset.
See,
Sir,
subsidiary is selling goods to parent for
sir, can you
15,000.
hear me?
I can hear you. Yes. Can you hear me?
Yes. Yes, sir. Yes.
Subsidiary is selling goods to parent for 15,000. What is the cost of that goods for subsidiary? 12,000. So subsidiary has made a profit of 3,000. Do you think this is a realized profit or unrealized profit for the group?
Unrealized profit,
Why
sir.
it is an unrealized profit? Because this
Because
has
it
not
is
been sold to
between the
outsider, correct? So we will deduct this profit from the retained earnings of subsidiary. How much? 3,000, because subsidiary sold the goods to parent. And you will
yes,
be
sir.
showing the inventory at cost or selling price in your balance sheet.
Cost.
That is understood fact. So 3,000 from the inventory also. And inventory in this question is included in current assets, not totally, because they did not give you inventory separately. Correct or wrong?
Yes, sir.
Yeah. So your current assets, where is that? Yeah. So they have given you current assets how much? So let's see here.
40,000 plus 30,000.
So we will add that 40 plus 30. We'll take, no problem. So 40 and like 30. And then we are removing what? 3,000. Are we removing or not? Please tell me.
Yes, sir. Unrealized.
We are removing now. Yeah. Now the next point. Next point. Please understand. See, they have also given something. Na? At the same date, P company owed S company. How much? How much P company is supposed to make the payment to S company?
12,000.
For goods bought, and this debt is included in trades payable. So is this an intercompany transaction? 12,000 will be deducted from the asset side and 12,000 will be deducted from liability side. Correct or wrong?
Sir, can you repeat once again?
See, there is a intercompany like transaction between parent and subsidiary. Parent
Yes,
company
sir.
has a payable of 12,000 to subsidiary. So subsidiary has a receivable of how much?
12,000.
12,000 from parent. So this will be cancelled out now.
Yes, sir.
So I'm removing that 12,000 from total of current assets. The same 12,000 I have to remove from liabilities also or not?
Yes, sir.
Yes. So 12,000 here we are removing.
15,000.
This 12,000. So 40 plus 30 is 70. 70 like 70. 70 minus 12. 70 minus 12 is how much? 58. 58 minus 3 is how much? 55. Correct?
Yes, sir.
Yeah. So all of you, are you hearing? Are you following? Please tell me. Anyone has got any
Yes,
doubt?
sir.
Anyone has got any doubts can ask me. Priyanka, did you understand?
Yes, sir.
Yes. And Purva, you understood? Rajeshwari, you understood? Meghna, did you understand?
Yes, sir.
Yes, sir.
Okay, okay. Please sound confidently so that I can get an idea you're getting or not. And please don't shy away from asking any doubts. You are very much like welcomed as well as open to ask your doubts. Okay. Until and unless you learn the concept, you're not helping yourself and as well as you're not helping me one. I want your help badly by clarifying your doubts so that in the exam you could do well. Okay. So the concepts are very well explained here and the asset total is 1,90,000. I don't think any of you got any doubts here. So let me move forward. So whose share capital will be taken in the question? The parents, correct? And let's now also move to the retained earnings working notes. So what is the retained earnings opening balance?
The parents.
Yeah, so retained earnings will be taking the opening balance of the parent. This is the parent, okay? This is the parent retained earnings.
Yes, sir.
And parent also got the share out of the subsidiary company's profits. Correct or wrong? 80% they got of 90,000, na? 9,000, sorry.
9,000.
9,000, yes. We discussed the subsidiary companies Retained earnings is 22,000. That is the retained earnings at the end of the year. From that, we deducted the unrealized profit because subsidiary sold the goods to parent, and between parent and subsidiary, if any transaction happens, that the profit is the profit made in this kind of transaction is a unrealized profit. We remove this. Pre-acquisition retained earnings were 10,000. We remove this. 9,000, 80% has gone to the parent and the 20% has gone to NCI. We also have calculated that. So 52,200 comes here and 10,800 we have already calculated. Now the current liabilities section. That's it. This will end the question. Your current liabilities is 21,000 and 18,000. How much is that?
39,000.
Out of that, how much we need to deduct?
12,000.
12,000. Why? Because it was payable and receivable between subsidiary and parent. So 27,000. Done. So this is all about this question. Anyone has got any doubts can ask me, and your balance sheet is tallied. We'll go for the next section now. Okay, we are moving forward.
Okay.
See, the next section, what you're going to do is the similar and very, very similar section to the intercompany transaction between parent and subsidiary. Okay, intercompany or intra-group transaction between parent and subsidiary. We did the previous section which was related to inventories. Correct or wrong? All of you please tell me. There was a exchange of inventory between parent and subsidiary or not? Sometimes some questions were given whereby parent was selling the goods to subsidiary, and some cases it was subsidiary who was selling to parent, and there was a case of unrealized profit in case of closing inventory or unsold inventory. All of you, yes or no?
Yes, sir.
Yes, sir.
So what we need to do in this case when there was a like closing inventory, like suppose parent sold goods to subsidiary of $10,000. Out of that
Your
$2,000.
voice is breaking.
Can you hear me now? Can you hear me now?
Yes, sir.
Yes.
Parent sold goods to subsidiary of how much? $10,000. Actually, these goods were bought by parent of how much? $8,000. And these goods are with whom right now? With subsidiary. And this entire goods is unsold goods. Correct? So the subsidiary has how much of goods now? 10,000. Now you tell me, when we consolidate, what will be the treatment here? The inventory.
So we deduct the unrealized profit from the hedge retained earnings.
Of course, the inventory will be of 8,000 and from retained earnings will be deducting 2,000. Correct or wrong?
Yes, sir.
Now, instead of inventory, you assume parent has sold subsidiary a non-current asset. What is that? Suppose parent sold subsidiary some land. That land the parent bought for 1 lakh. And the parent, that is the cost price. The parent sold this land to subsidiary at 1,20,000. Now, this particular land, of course, will be in the group itself. Tell me yes or no?
Yes, sir.
So this particular sale here is between the parent and subsidiary. It's an intra-group sales.
Yes, sir.
Yes, sir.
So 20,000 of the profit will be nothing but unrealized profit.
Yes, sir.
And this particular unrealized profit, when separate set of books were maintained, parent has shown in the books.
Yes, sir.
When parent has already shown in the books now, because parent sold the goods to subsidiary, and when these were different companies, that means when they were maintaining separate set of books, parent has already shown the sale of land transaction in the books of parent, and from this transaction parent also made $20,000 profit. But when you consolidate the parent and subsidiary companies accounts, that means when you make them when you show them as a single company or when you prepare group accounts, this $20,000 definitely would be considered as unrealized
Will
profit.
be deducted.
Unrealized profit.
Yeah. So this unrealized profit you have to remove from which account?
Retained
Hedge return.
earnings.
Retained earnings, as the same treatment you did in the case of inventory. Correct or wrong? Why?
Yes, sir.
From retained earnings. See, this is the statement of profit or loss. Whatever the like profit on sale of asset definitely would have been shown in the statement of profit or loss. That profit on sale of asset, which is $20,000, is definitely included in your net profit. This net profit has again been transferred to retained earnings. And in this retained earnings, the 20,000 balance is nothing but is the balance of this transaction between parent and subsidiary. This 20,000 is the profit which has got created in a transaction between parent and subsidiary, which was nothing but the sale of land. Correct or wrong? All of you, yes or no? This 20,000 profit was created in what transaction? When parent sold the land to subsidiary. Correct or wrong?
Intra-group.
Hello?
Yes, sir.
Yes, sir. Intra-group.
Yeah, intra-group. And this 20,000 profit is already there in the retained earnings. So you need to remove this 20,000 from retained earnings. That is one like treatment. Second, will you show in this is the transaction between parent and subsidiary, na? So they have to show the land at cost or a higher price, selling price. The land should be shown at selling price or cost price.
So can't hear you, sir.
Hello?
Yes, sir.
See, there is a connectivity issue, I think. Hello?
Yes, sir. Now we can hear, sir.
Everyone can hear me now. Please tell me, please.
Yes, sir.
Yes.
Yes, sir.
sir.
Yes. So this profit, which has got created due to the transaction between parent and subsidiary, the transaction was nothing but the sale of land. This profit is nothing but an unrealized profit because this has not been, the land has not been sold to third party other than parent and subsidiary. And in the balance sheet, they will show the land at cost price or selling price.
Cost price.
Why? Because the transaction is between parent and subsidiary. So nothing,
Yes, sir.
the value of the land is not increased here. It is just between the parent and subsidiary. It is between the, like suppose there is a shop in Kachiguda and shop in Himatnagar. So Kachiguda shop transferred one piece of land to Himatnagar shop. When they'll be showing themselves as one company, do you think they can show the land price at higher value or they have to show at cost? Common sense.
Cost.
They have to show at cost. Why? Because they cannot higher value. Why? Because it costed them that much. It costed them how much? Just 1 lakh. Okay. So when they will be, so this 1 lakh, what did I say? 1,20,000. So what will happen? What will happen in this transaction? They have to show the land at 1 lakh itself.
Cost.
So they will remove this 20,000 selling price. Okay, that's it. So from here 20,000 removed, from here also 20,000 removed. So the entry is nothing but what? Previously, when the non-current assets were bought, when the non-current assets were purchased by the parent, non-current assets to cash. And these non-current assets were sold to whom? The parent bought the non-current assets for 1 lakh. These non-current assets are sold to whom? Subsidiary. Correct or wrong? Yes.
Yes, sir.
So when they sold the goods to subsidiary, I mean to say this particular non-current assets to subsidiary. Okay. What is the entry? Subsidiary company to non-current
Land.
assets. So all these things will not go for. We already have done the inventory section. Na? There definitely like the profit has gone to retained earnings. The profit has got credited in retained earnings. Correct. So retained earnings was created and your asset account was debited. That is non-current asset account. See, you showed the profit in retained earnings, na? And the non-current asset value is nothing but higher by 20,000 because it was sold at 1,20,000. by the parent to subsidiary. But when you do the consolidate, this is when they are maintaining separate set of books. When they are maintaining separate set of books, correct or wrong? In the books of parent,
Yes, sir.
Yes, sir.
in the books of parent, non-current asset, they showed 1,20,000 and retained earnings also, like they have kind of credited the 20,000 profits. Just I'm showing you. Now what will happen? The additional amount of 20,000, what they will do? They will remove from non-current assets and from retained earnings. So what will be the consolidated adjustment? Retained
1 lakh.
to non-current assets. So this is debited and this is credited. You can see this.
Yes, sir.
You can see this. Okay. And whatever the profits have come, that also they have removed from. This is the sale by parent. So what is the first entry? Sale by parent. So what has gone from the like books? That means what has been sold by the parent to subsidiary? Non-current assets. Correct or wrong?
Yes, sir.
Yeah.
Yes, sir.
Non-current. This is just a second. This is the, they are giving this heading now. This is the consolidated adjustment. Debit the retained earnings and credit the non-current assets. Whatever the profits they made on disposal, that means when parents sold the goods to subsidiary. Acha, they are giving two entries here. So see, first entry is nothing but the consolidated adjustment. Group retained earnings to non-current assets. Every one of you, do you have any doubts in this entry? Please tell me. Do you have any doubts in this entry? Please tell me.
No, sir.
No, sir.
Anyone?
No, sir.
Everyone, na? Point number 2. With the profit on disposal. What is this profit on disposal? Definitely the parent has sold the goods to subsidiary and they made some profits, correct? So that profit has got credited in which account?
Subsidiary retained earnings.
Subsidiary retained earnings, correct or wrong? Yes. And just a second, let me read out these points here. Retained earnings of the entity making the sale are debited with unrealized profit and the additional depreciation is paid back to entity. Okay. Okay. So we'll see a question, and after seeing a question, we'll easily understand this one. Let's see. See, please understand this question. P company owns 60% of S company. So parent owns how much of subsidiary? 60%. On 1st July 2001, subsidiary company sells plant costing 10,000 to parent company for 12,500. So subsidiary sold plant and machinery to whom? Parent. How much was the plant and machinery to subsidiary? How they bought it for how much?
10,000.
They sold it for how much?
12,500.
So do you think this 2,500 is a realized profit? Unrealized profit, correct? Now, yes, unrealized profit. Now, the companies make up accounts on 31st December and the balances on the retained earnings at that date are this. So at the end of the year, the retained earnings balance in the books of parents are 27,000 and in the books of subsidiary are 18,000. And that includes what? Profit on sale of plant, correct or wrong?
Yes, sir.
Yeah, parent, the subsidiary sold the plant and machinery to parent and they made a profit of how much? 500. This 2,500 is a realized profit or unrealized profit? Please tell me. Unrealized profit. So can I, when I do the consolidation, this particular 2,500 will be an unrealized profit. When they were maintaining separate set of books, that was a profit for subsidiary. But when there is a consolidation happening at the end of the year, this would be considered as an unrealized profit because it is between the between parent and subsidiary. Those are intercompany, that's an intercompany transaction or intra-group sale. So now from subsidiary company's retained earnings, I am removing the unrealized profit. So how much is the retained earnings now? 15,500, correct or wrong?
Yes.
Now here, please be careful. Please be careful, okay? See, this particular asset was bought at what value?
10,000.
And this was sold to like parent at what value?
8,500.
Correct? Now please tell me, the parent company which was maintaining separate set of books, have shown this particular asset as 12,500 in their books, correct? And they were doing the depreciation at the rate of 10%. They were doing the depreciation or not? Please tell me.
Yes.
That
Yes, sir.
depreciation was on the value of 10,000 or on the value of 12,500?
1,500.
There is a lot of disturbance, I think, from the connectivity and network thing. Can you hear me?
Yes.
It's very tough to hear your voice. Really, I'm saying. I'm not able to like kind of hear. Every one of you can hear me. Please tell me.
Yes, sir, we can hear you.
Yes, sir.
I'm extremely sorry. I cannot hear your voice properly. Okay, fine. See, the subsidiary company has bought the plant at 10,000 and they sold that plant to the parent for 12,500. Now parent is showing the plant in their books at 12,500. So now the depreciation as per 10,000 asset would be 1,000. Depreciation as per 12,500 asset would be 1,250. All of you, please.
Yes.
So there is an excess depreciation of how much?
250.
250. And there has been a profit of 2,500 in this particular disposal, correct?
Yes, sir.
Yeah. So now when this particular consolidation would be done, the profit made out of this transaction was 2,500 and the depreciation also, excess depreciation from this transaction was how much?
250.
50.
So what will you do with this 250? Yes.
Deduct from Percy company.
Deduct from
P company, Percy.
We will add us to excess
Rajesh,
depreciation.
your voice I'm not able to hear. The first point. See, I will tell you what to do. See, this particular transaction has happened between the parent and the subsidiary. Subsidiary has sold the land to parent at 12,500. So the excess profit in this case have to be removed. And the already removed depreciation of 250. Okay, all of you do one thing, 27,000 plus 250, you just add back. Just add back, please. How much is the value?
27,250.
And then add back 9,300.
Sir, can you repeat once again?
27,000 plus 250 na, add this to 27,000 plus 250, how much?
27,250.
And then add this 9,300.
36,550.
Yes, then what is it? Why are you adding this 250 here?
Excess of depreciation.
See, why are you adding this 250 is what you removed as excess depreciation in consolidation, this removed thing again should be
Added.
Why added? Because you're removing the unrealized profit or not.
Yes, sir.
So unrealized profit is removed and this excess depreciation also removed from the books because it is between the parent and
Subsidiary.
the transaction is between parent and subsidiary. Okay. So the adjustment would be in this way. Whatever you have included, you need to remove. Whatever you have excluded, you need to add back. The point is, when subsidiary sold the plant and machinery to parent, which was of 10,000 at 12,500, the subsidiary got a profit of 2,500. Correct? That was a profit which they made, which subsidiary has shown in the books when it was maintaining the books separately. When parent and subsidiary were maintaining separate set of books, and at that time when subsidiary sold the plant to parent for 12,500, which they bought for 10,000, they already have realized a profit of 2,500 when they were maintaining separate set of books. But when it is parent plus subsidiary, and this 12,500 the parent is showing in the balance sheet, and they are calculating the depreciation of this. The depreciation is how much? They are calculating 1250. But please understand, when we are consolidating, that means when we are making a group account of parent and subsidiary, can you tell me this realized profit can be shown or this has to be removed?
Removed.
Why this has to be removed? Why? Because it is now a single company and this is an unrealized profit. Correct or wrong?
Yes, sir.
And this,
Yes, sir.
and this excess depreciation of 250 is a realized depreciation or unrealized depreciation?
Yes.
Hello? Hello?
Unrealized
Realized
depreciation.
See, there is no word
Un-
called unrealized depreciation, but for your sake and for making the concept easy to you, I'm just telling you, when this profit
Yes, sir.
cannot be recognized, which is a unrealized profit, so the excess depreciation what parent has already made to the asset, will that be again recognized or will that has to be reversed back? Please tell me.
Reverse back.
Reverse back. Why? Because you're showing the asset at 12,500 or 10,000 in the group.
12,000.
What? 12,000?
10,000. 10,000.
10,000. So where is the question of showing excess depreciation then? See, please try to understand the concept. Parent, subsidiary. Okay. In this case, who sold the goods to whom? Who has sold the non-current asset to whom in the question? Subsidiary, correct? So this is separate set of books. Subsidiary bought a non-current asset from some party for 10,000 and sold this non-current asset to parent for 12,500. They are maintaining separate set of books. So this particular asset which is sold by subsidiary to parent for 12,500, they bought it for 10,000. So subsidiary has made a profit of how much? 2,500. Correct? Please tell me yes or no. Hello?
Yes, sir.
They made
Yes,
a
sir.
profit
Yes,
of
sir.
2,500 and this 2,500 they have shown in the SOPL. Okay. And from SOPL that has gone to retained earnings. Okay. Now, this parent has got the land for or non-current asset for 12,500 and they are showing this particular land in their books at 12,500. I'm speaking about separate set of books. And they are doing a depreciation of 10% for this. That is, they did it for 10% and the first year's depreciation came out to be 1,250. Correct? Till here, any doubts?
No, sir.
No. Now, assume this is not these two are not separate companies, they are one company. We are trying to make them as one company, parent plus subsidiary. So they need to show this particular asset at 10,000 or 12,500.
10,000.
10,000. Why they need to show at 10,000?
Cost.
Why? Because this is not, these two are not separate companies. What has come to subsidiary is the same which has costed to parent. Correct or wrong? Please tell me.
Yes, sir. Correct, sir.
It is assumed like that. Now, what has come to subsidiary or what has come to parent is is of the same value to the group. So we will show 10,000. So this 2,500 unrealized profit will be removed from whose books? Sorry, from which account? Retained earnings, correct?
Yes, sir.
Why will be removed from retained earnings? Because we already credited this in retained earnings. Now we need to
Remove it.
we removed it because it's an unrealized profit. Point number 2, since the asset is of 10,000 to the group, the depreciation which was shown excess, actually how much depreciation should be shown?
1,000.
Because 10,000 ka 10% is how much?
1,000.
So that 250 excess depreciation which was already debited, now we should be
Added.
added. That's it. We should be crediting it. So credited. That's the reason why we are adding. Okay, that's it. So this again has made this 27,000 plus 250. Why 250? Because already 250 has been debited, has been shown in the P&L account. That has reduced our profits. Now, since the asset is only of 10,000 to the group, that excess depreciation is of no use because that now shouldn't be shown. So we need to do the correction. So what we already debited or already deducted as depreciation, we need to add back. So we did that correction, and now how much it is? 27,000 plus 250, and this 15,500 ka 60% will go to parent. Why? Because parent has acquired 60% shares in subsidiary. So the total retained earnings of the parent company is 36,550. Okay, and then 40% would go to NCI. So 15,500, 40% has gone to NCI, and the profit on transfer less depreciation is this, will be deducted from carrying amount of the plant to, that's what your plant is of how much now? 12,500 for whom? See, I am writing it here. Please understand. This is the asset side of balance sheet. This is the, I'm making a T-shape account, liability side of balance sheet. In retained earnings, they showed how much profits? 2,500. This is what? Unrealized profit, correct or wrong?
Yes.
And here the asset was shown how much?
12,500.
And here, like we will remove what? We will remove 2,500, or we'll remove how much? What am I asking to you? How much we should remove? We should show the asset for how much?
10,000.
10,000. And
10,000.
yeah, retained earnings will be removing what?
250. We will add that.
2,500. Correct or wrong?
Yes, sir.
Then what about this then? What is this treatment they're showing here? What is this? The profit on transfer. So profit on transfer is how much? 2,500, no? Less related depreciation of this much will be deducted from the carrying amount of plant to write down to cost to the group. What is this? What is this?
So the carrying amount of plant. So
See, the plant will be shown at 10,000 itself. There is no doubt. So what they will do is 12,500. Okay. What is the depreciation they did? They are, see, what is the entry for depreciation? Depreciation to accumulated depreciation, correct?
Yes.
This is the entry, na?
yes, sir.
Yes, sir.
There is one more entry, na? Whenever your asset account is like depreciated, the entry would be what? Depreciation to asset. That is also an entry, na? Debit all expenses to depreciation and credit your asset. So okay, depreciation to accumulated depreciation. So here the entry was 1250 and here it got accumulated to 1250. But the accumulation is of excess 250, correct? Actually, it should be how much? It should be 1000.
1000.
So that extra 250, which was already included, should be again readjusted, correct or wrong?
Yes, sir.
So from this 12,500, we would be what we would be doing to this 12,500? We would be what we have removed, we would be
Added.
now we removed now, we will be adding. But again, it does not cost. Just a second. The profit is this much, okay, will be deducted from the carrying amount of plant to write it down to cost to the group. So again, 2,250. Here, how much we are showing? Profit on transfer. So the profit is this, less the depreciation. Depreciation is this, will be deducted from the carrying amount of plant to write it down to cost to the group. So this again, okay. So what is happening is the